I'll mention too that David Juch, I hope I haven't butchered your name, Dave, but
Deutsch it is, as in the
Which it
Deutsch
is.
mark.
That's okay.
uh, David is probably the person that is sort of deals with a lot of the inquiries. So yeah. So how's it going, David? Good to have
Yes.
you.
Good, thank you. Yep. Any questions, fire away, and we should be able to answer them.
Alrighty, well, shall we just shall we get into the presentation?
Yeah, we might as well do that. I don't know. Depends how. Hopefully, I can keep it to about half an hour is sort of the aim. It's often not as easy to keep to that, but about half an hour, and then chuck any questions that come up as we go in the chat, and David will keep an eye on there, and we'll answer them as we go if they're relevant. Otherwise, we'll cover them all off at the end, hopefully. So yeah, that's about the plan, I think.
Yep, we'll do a Q&A at the end.
Cool. Oh, well, I'll try and share my screen here. That's the first thing to achieve. So we'll just make sure that
we can see you there.
We can see that. And bear with me. Just need to move something out of the road. Might as well make that full screen. How's that looking, Tony? Can you see that on the full screen now?
Yep, that's great.
Cool. Okay, let's crack into it. Yeah, so thanks again, Tony. Yeah, the topic there, as you can see today, is recession-proofing your portfolio with gold and silver. It's probably first worth. Sorry, and the slides aren't clicking through. What's going on here? Sorry, folks. Then moving on to the next one. Oh, we'll do it manually. So quick legal stuff, disclaimer. We're not financial advisors and accountants and all that. So this is a starting point for you to do your own research and due diligence and seek further expert advice. If you do that, they'll probably tell you not to buy gold and silver anyway. But yeah, make up your own mind. So yeah, that's me on the left, Glenn Thomas, David, business partner on the right. Yeah, we've been around the traps a while, 39 years, it might even be taken over to 40 now, combined in the precious metals markets. We started our website, Gold Survival Guide, back in the year 2009, sort of just in the midst of the financial crisis, as an information site back then. And excuse me, I should say I'm getting over a bit of a lurgy, so if I cough and carry on, I'll say apologies in advance, and if I need to stop for a drink of water, I'll do that as well. But yeah, basically we began selling physical precious metals in response to we had questions from people about, where do you buy, who do you trust, all those sorts of things. So we started assisting people to remove some of their wealth from the risks of the global financial system. And now we've got clients in chiefly in New Zealand, but also Australia, USA, Europe as well. So yeah, that's how we started out, just sharing information, and we actually became effectively a precious metals dealer as a result of that. So yeah, I guess today, actually, I'll just go back. So I mean, that's the topic there, and I suppose just to give you a quick run through, we'll cover various things. As you've just had a hint there, we'll look at the US debt situation. We'll look at the reasons why you might buy gold and silver, what types you might want to consider buying, things to consider before you buy. We'll look at storage, and we'll compare gold and silver to other assets as well. So yeah, that's just a real quick run through. Hopefully I'll cover all that off while we're going. And yeah, as it says there, the US debt's recently just hit 35 trillion. In fact, under the last couple of US presidents, I think it went up by something crazy like 15 trillion. So it took a long time to get to 20 trillion, and only took a couple of lots of presidents to get up to 35. So, and it doesn't seem to be slowing up either. So I guess the question then to ask is, does this really matter? There's a famous or infamous economist, Paul Krugman, who said back in a few years ago, maybe about 2015, that it doesn't matter since we owe it to ourselves. But yeah, just recently, a key thing's tipped over where, because that debt's got so high and because of the current interest rates, I think the US is spending something like 76% of all its personal income tax just in recent months to actually service that 30. I put 34, but it's already gone up to 35. So the now $35 trillion national debt. So yeah, is that significant? We think that the level of debt may have a very significant impact on the value of the US dollar, because as you've possibly heard at the moment, there's sort of talk about whether the US central bank will start cutting their interest rates. I'm sort of saying that's because the US economy is slowing. That's maybe part of the reason, but probably the other one might just be because the US central bank is almost being forced into it just to cut cut the rates to ease that debt burden. So yeah, then I guess the question also comes from that is, are they actually looking to try and inflate some of that, or inflate that debt away? So will we be potentially looking at the next time there's some weakness or a stock market crash or something like that, that they might already be cutting interest rates, and will they actually look at firing up the printing presses and undergoing quantitative easing or some other newfangled invention? And so then the question from that is, will that actually unleash more inflation? So, I mean, as here in New Zealand, we know we've had a pretty weak economy for the last 18 months with higher interest rates and so forth. But it seems that most other economies in the world are also have been slowing down, or like in the US, they're now starting to slow down as well. And so with that sort of almost coordinated global slowing, might we be close to seeing a return of what was called stagflation? And so that's where the economy sees slow or no growth, but also at the same time you see higher general price inflation and higher unemployment. And that name comes from the combination of a stagnant economy and inflation. So hence stagflation. Doesn't really have anything to do with actual male deers like I've put on there, but that was just something we put on the website to attract a bit of attention a while back. We've been talking about stagflation for a little bit, but yeah, that was something that most mainstream economists thought was pretty much impossible to happen back then, as high inflation isn't meant to occur in a weak economy. But yeah, that was until the 70s proven wrong. And if anyone lived through that, I was in my kind of more formative years and don't remember too much about that, but I've read plenty about what happened back then, and I know my parents talked about it as well. So that's where inflation rose while the economy contracted and unemployment was also really high. So we've been discussing that for a while, and back in 2018 we kind of wrote about how it might come about, and we didn't really predict COVID or the things that would happen from there and the amount of currency printing that happened and so forth. But yeah, we kind of went through a process there where we were seeing some inflation. And so now the question is, like, what happens from here, basically. So it actually just shows that Google search trends and shows the search for stagflation. It shows that it really spiked up back in 2022 when obviously inflation was increasing. Now we've dropped back and it's sort of there's not really any real interest in it again. So one theory on that might be that it's definitely not going to happen because no one's searching for it. Another theory might be the fact that no one's searching for it. Maybe that's something that we should be worried about. And all the bank economists are certainly talking about, inflation coming down. It's getting back to normal. We're kind of a little bit, maybe a year or so away, but we're getting back towards normal again. This here sort of says maybe perhaps not, because we've got the benefit of looking back into the high inflation of the 70s and seeing what happened back then. So this is the US consumer price inflation, just this blue line here. I'm not sure whether you can see my cursor moving up and down it, but this is the 70s back here. And you'll see it actually, interestingly, it kind of spiked up a couple of times, spiked up again here in the early 70s, came back down to 3%, went all the way up to 12, down again, right the way back up in the later 80s, before finally coming down. And then we had this, what they sort of might have called the Great Moderation, where we had pretty low, steady inflation. Then we've had this spike up here in the, aftermath of COVID. This chart's a little bit old, but you'd see this will have come back down. This is the US CPI, and I think that's maybe down to about 4%. So it's somewhere down about here. So, yeah, we've got a historical precedent that shows during highly inflationary times that inflation can occur in waves. And it actually, once you've let the genie out of the bottle, it's actually quite hard to stuff it back in there. it might be, you might have poked it down a bit, but there's a reasonable chance that it could poke its head back out again. So we think that's a pretty there's a reasonable risk of that. There's a lot of similarities between the now and the 70s, and in fact, if we get onto this next slide, actually, sorry, I might have just missed one out. Oh, sorry, folks. Oh no, it'll come up later. Sorry, my fault. I was thinking I think I might have changed the order on myself before I started. Anyway, we'll come back into do some comparison of now to the 70s a little bit further on. But yeah, in terms of having a look at some of those past recessions and market corrections, like the 2008 financial crisis or the 1970s stagflationary period, let's have a look and sort of see how gold and silver performed during those periods. We can see here back in, this is the sort of 2007 to 12 period. This is gold priced in New Zealand dollars, and we can see it went up pretty significantly from down below $1,000 up to over 2,000. And so it rose when property was actually pretty stagnant during that period, which I think this next chart here just shows you. That was the period there where property was pretty flat. So you'll see a similar scenario. Silver also gained strongly during that period of time when property was down or flat, but you can see it had silver was a lot more volatile than gold, which we'll get to later as well. So it had some sharper corrections before then running sharply higher. And yeah, you'll see the gold price here in stagflationary 1970s during that decade. The gold performed strongly, and it went from less than $50 all the way up to about 850, which is this is actually only a weekly kind of chart, so it misses out the bigger spikes that happened towards the end of that. So it spiked right up to 850. And if we look here, we can see this is just comparing a lot of other different types of assets and share market oil, all sorts of things, ships, mines, coal. We can see all sorts of categories and industries and things covered down here. But during these recessionary times in the 1970s, we can see gold was vastly outperformed everything else. Silver also, that's that same decade. We can see it went from $2-ish, all the way up to hit a high of 50. So right up here, because again, this is only a weekly chart. So it certainly performed well during that period of time also. Here's the chart I was actually looking earlier, which I was thinking was came a bit earlier in the piece, but this is just a comparison of 1970s to maybe what might be called stagflation 2.0 in this current era. There's a lot of similarities. You can see we had COVID and lockdowns and supply chain war. Back in the 70s, we had oil embargoes and the Yom Kippur War and the Iranian Revolution. As that chart earlier showed, we had 4 phases that happened between sort of the early 70s and early 80s. Today, maybe we're just in the first one of those phases. We saw there's some differences there in interest rates. Big difference there is how bad, a lot of these are US numbers, of course, how bad the US budget deficit is compared to the 80s. Probably the key difference here that I think is, which I should have put a circle around it, is this debt area here, which was actually pretty low in the 70s, compared to current times where we've got government debts that are well in excess of 100%. We've got high private household debt like we have here in New Zealand, while our government debt's not as bad as the US. We've still got very high private debt, so that's probably a key thing between the two eras. And you might recall that they did fight that inflation in the 70s by cranking interest rates up. They went way up into the high teens. And currently we've got interest rates that have climbed to 4 or 5%, and that's certainly, you can sort of see the damage that's been wrought upon the New Zealand economy over the last 18 months, just from what are actually not that high interest rates historically speaking, but So that's the key difference. That's kind of a key risk between now and back then, that it's going to be, if we do get another surge, it's going to be harder to get that under control, I think. So yeah, there's various other similarities and things there, but we won't delve into that. Otherwise, we'll be here all night. So yeah, I mean, I guess the question then to ask is, how does gold protect us in, potentially sort of troubled, uncertain times, maybe through recessions or stagflation, or maybe even, hyperinflation. And the thing that gold and silver has is a few thousand years of history, shows that they maintain their value very well. For example, here we've got this funky looking dude over on the left in his toga and sandals, and this slightly more modern looking guy on the right in his suit and shoes. And that just shows that an ounce of gold, what that coin there is today, will still buy you, a fine men's suit and shoes, just like it did back in Roman times, so we're talking thousands of years, versus like our current currencies that, they lose value every year. And if you go back 100 years, they'll be worth about 1% of what they were back then. And in fact, if you go back into the 70s, they're probably still worth 1% of what they were then also. So yeah, that just shows the power to hold their value that gold and silver have. And so we like to say that they're not an investment, but rather to look at them as wealth insurance, but with a potential upside. So it's a store of value that helps you keep what you've got, but it also could potentially significantly increase your purchasing power simply by not touching it for a number of years. And I guess unlike other insurance policies, even if you don't have to make a claim, like even if the end of the world doesn't happen, you actually still get your insurance premiums back that you paid, which you can't say that about, house, car, and everything else that you pay insurance for these days. So yeah, it's got a bit of upside, but you also, there's not much chance of it going to zero either. And the key thing there is that with gold and silver is that they don't have any counterparty risk. So another way to put that is that one of the only financial assets that's not at the same time someone else's liability. So you're not relying upon a person on the other side of the trade or the investment to remain solvent. So you compare this to the likes of bank accounts, where your savings are the bank's liability. Shares and stocks, you're relying upon the company to keep trading and pay your dividend, etc. Bonds, you're relying upon the government or the company to remain solvent and pay you the coupon amount at maturity. And then property, it's usually got a mortgage holder against it. And then you're relying upon the person leasing or renting to pay you the amount each month. And then you've got other things like exchange traded funds and options and futures, and all these kind of financial products all involve another counterparty, such as the broker or dealer. So you're relying upon them to pay you and to cover their side of the investment upon the due date. Even if you look at KiwiSaver funds, they're not actually government guaranteed. And here at the moment in New Zealand, we still don't have a government guarantee on or deposit protection on any of our bank deposits either. There's something coming in there maybe in about a year, but currently as things stand, we don't have that. So yeah, that's why we say, you're basically removing some of your wealth from the banking system. It's a hedge against a failing system or a financial collapse. And it's financial insurance against the likes of a bank failure, which, as we said, is not actually, there's no government guarantee currently. And it sort of reminds us of the likes of SVB Bank and the other bank failures that happened in the US last year, just showing you some of the potential risks that are sort of out there. So then getting on to the other part of, we've covered the financial insurance. The other part then is the upside potential. And so a common question is, how high could the price of gold go? But more and more dollars, yen, euro, whatever currency you're measuring in, are created year after year. So putting a dollar price on gold, I say, is a bit like trying to measure a distance with a rubber band. Like it's always going to change. So that's why we instead prefer to measure things, measure gold and silver against other actual assets. And so this is one here, which is just called the Dow to gold ratio, which is just the US broad stock market index. And so basically we take, that's currently, when I did this yesterday, it was just over 41,000 was the Dow Jones Industrial Average. And the US gold price was just over $2,500. So when you divide that into 41,000, we get about 16 ounces of gold to buy the Dow. So you might say, so what? Because that doesn't really mean that much to anyone. But it's a bit more useful if we take a long-term look back. And this is a kind of a busy looking chart, but it's actually relatively simple. It's just plotting that Dow to gold ratio over the course of 200 years. And we can see here it kind of just steadily went up, but it was through a fairly narrow band through these first 100 years until 1913. That's a fairly key date there when the US Federal Reserve was created. We can kind of see the effect of that and how that changed the monetary system. And we had these bigger spikes here. And so this band up here shows that stocks were very high and gold was cheaper. And this down here is the opposite. And we can see that we've had fairly large spikes up and down. We're currently at whatever I just said we were on the other page. It's 100 and
16 to 1.
100 and I was meaning back to what we are here now. We're at 16, just over 16, which is it's probably just dropped down slightly from here because this is not quite the very latest data, so we're down a little bit here. But basically, we've seen these big swings, and if we look back to that end of that stagflationary 1970s, which was this period through here where this blue circle is, we can see it got down to 1 there. And so potentially, we've seen these swings. Potentially, we might see this ratio get back down to 1 or even below 1. So then you're looking at basically the Dow, which is currently 41,000, being the same price as an ounce of gold. So of course, there's various ways you could get to that. The Dow could fall and gold could rise in various combinations, but it shows that there's quite a big difference, and potentially that could still. The Dow could still fall 16 times in comparison to gold, or gold would go up 16 times in comparison, I suppose is the other way to say that. Oh, and this is just a shorter time frame, so this is just the last sort of 20 odd years. That just shows here that it looks a bit busy again as well. But the gist of that is that this ratio here is just starting to break down. It went up, meaning that shares were outperforming gold during this period from 2011. And then during COVID, which is the spike down here, we can see that gold actually outperformed shares. And then the opposite's happened. Shares have risen up sharply. But now, since about 2021, shares have been falling against gold, or the broad US stock market index as anyway. I better get cracking because I see where timers are ticking. So some other measures to look at against real things. I think another useful one is the housing to gold ratio. So it's much like that last ratio. We take the median New Zealand house price, which for the end of July was about $750,000. We divide it by the New Zealand dollar gold price at the same time. At the end of July, that was just over 4,155 to be exact. And we had 181 ounces. Again, so what? Who cares? Probably if you start to look at some of the historical charts, you might care. The black line's just the New Zealand median house price index, but the orange one is the housing to gold ratio. And so we can actually see, at the moment we're down to 180. So this chart's at the end of last year. So that's actually dropped down a bit because New Zealand house prices have fallen a bit and gold's actually risen quite a lot. And we can see here in 1980, the end of that stagflationary 70s, it got right the way down to 55 ounces to buy the median house price. So even though gold's gone up a reasonable amount, it shows there's quite a bit of upside there. And if you do those calculations using 55 ounces, well, then the median house price of about 750,000, if you divide that by 55 ounces, that would give you a gold price today of about $13,700 versus the about 4,000 that we're at currently. So that's if we got back to a similar ratio between house prices and gold as we had back then. Even if you only went as far as 100 ounces, you'd still be looking at sort of 7,500, which is close to double what it is from now. So that's just looking at the same thing measured in different countries. That's the US. You can see the numbers are pretty similar. They were 250 as well back at the end of 2023. Won't spend too much on that. Same with in Australia, 250. So you can see, even though they're in different countries, the ratios sort of still work out around about the same. We can do the same thing with silver. Again, the median house price divided by the silver price, which is currently about $48, $49. We get about 15,500 ounces of silver to buy the median house. So again, we can plot that historically. So at the moment we've come down to, what did I say, about 15.5. So this has dropped. This has actually dropped a bit further here because silver's also gone up during this year since December. Back at the end of the 1970s, again, I keep saying that, but that's the last time kind of gold and silver peaked out. The bottom down here, 1980, was 1,100 ounces to buy the median house in 1980. So yeah, if we divide again that 750,000 divided by 1,100 ounces, we end up with about $685 an ounce for silver as a potential sort of future valuation if history repeated. And it's currently about what 40, 48, somewhere around there. So it's quite a significant change from what the current excuse me, silver price is. And again, just the same charts in US. I won't bother to spend too much time on that because it's sort of just showing the same thing. The one final measure that's actually worth comparing is gold comparatively to silver. So basically the gold to silver ratio, that just shows them how many ounces of silver to buy 1 ounce of gold. So that's the gold price divided by the silver price. So if you do that calculation there, it's about 2,500 US divided by about $30 US for silver. We get 84 ounces. And again, we can kind of compare that to where it's been. So we're up at, around 85 here. We can see it hasn't been this high very often throughout the last sort of 40 odd years. It's gotten up here on where all those blue arrows are. Has been higher back in the COVID share market crash times, where silver fell compared to gold. But yeah, we're at 85, and this just shows that these are maybe times when it's better to buy silver when it's above 70. Somewhere in the region here in the middle, you might get a bit of both. Down in these lower regions, maybe below 40 or even 50 or even 40, you might want to buy more gold. So that just basically shows we're in a time where silver is actually very undervalued, even compared to gold itself. So then, if we look at if we're interested in then maybe buying some precious metals, how much should you actually hold? That's a common question. It's obviously down to personal factors like what other investments you hold and what the level of risk and volatility you have in your portfolio and how much income you require from your investments, what the liquidity is required, how long you hold it, all sorts of things, and maybe the level of potential risk you see for a financial crisis or troubles in your home country or globally. And so there's been various studies done on this, but they sort of vary in the percentage allocation from somewhere between about 5 to 25%, maybe most commonly in the 5 to 15% of your liquid assets. So that's excluding property, real estate, maybe equity in your businesses. So yeah, your liquid assets, that's the sort of amount that's recommended there. There's other studies and things there. If you Googled what percentage of gold should be in my portfolio, you'll see an article of ours on that delves into that and a bit more, but those are just some broad sort of guidelines there to look at. Then we've sort of touched on already, but then let's look at some of the differences between gold and silver, because that's obviously a common question, is which one should you have? You'll see here in this chart that gold's actually less likely to fall in a crisis. Gold does still fall sometimes in crisis times, like it did in the financial crisis. It dropped, but it actually, you can see it dropped about 30%, but it made that matter back up in a few months. That's often because gold's actually very liquid. So in times of trouble, people will actually liquidate their positions to fund other things that have suddenly gone well underwater. So it's not uncommon for it to take a dip initially. You'll see silver can fall further and can take a bit longer to recover. So in a crisis, gold's actually the better hedge there, is what that says. Gold's also volatile, I think I mentioned earlier. So that's what that chart was there just shows as a visual way of that, plotting the how gold performed during the 70s versus silver. So yeah, silver's definitely a lot more volatile. So you just got to be able to stomach those potentially bigger moves. Silver's possibly a bit more comparable to sort of crypto in that regard, and that there can be a lot more volatility in there. So you need to make sure you got hold of your emotions if you've got a good handle on them, if you're into want to be in for some silver. Looking at a few other things, a affordability, as we've said, it currently costs over 80 times more per ounce for silver. So you can buy a 1 ounce silver coin for about $60 New Zealand, or about $40 US, versus a 1 ounce gold coin would be about 4,200 or a bit over that New Zealand, and about 2,600 US. So silver's clearly more affordable than gold, so particularly if you don't have too much cash. Silver also has the added advantage of being sold in much smaller dollar increments. So silver would be much better to fund day-to-day purchases. You know, you could use it to sell a few coins and fund your grocery bill in emergency, which is why we've seen more people, you know, actually holding some silver coins in recent years, just, you know, potentially some insurance for a worst case scenario there. Markups and margins. The markup above the commonly quoted spot price of silver is usually more than it is for gold. So therefore, some people prefer more gold over silver for that reason. And storage, gold also probably wins here because it currently, as I've said, takes about 80 times as much silver to reach the same dollar value of gold. But on top of that, gold's actually the most dense metal. It's almost twice as dense as silver, so it takes up about 150 times more space for the same value than gold compared to, 150 times more space for silver in comparison to gold. So yeah, you can store a lot of wealth in quite a small amount. You know, a gold kilo bar is sort of similar to a smartphone type size, really, to probably give you an idea of what that sort of size is. So yeah, silver will be more costly or difficult to store, and there is the possibility with silver of tarnishing if it's not stored in a dry place. Not that necessarily affects its value, but yeah, whereas gold's completely inert. So overall, there, gold probably wins overall on the storage front as well. The area where silver does win, which we've said already, is that it's got potentially a lot more upside. You know, gold's got to rise, you know, still a reasonable amount to reach its inflation adjusted high of US $850, but silver's got to go even further. This actually probably needs a little bit of updating, but even when it was done in 2023, the 1980 high adjusted for inflation was actually $162 versus the current about you know, down in the 30s that we are currently. So yeah, so silver's more likely well, silver's got a lot more upside potential, and silver's also more likely to perform better later in the cycle, as I think we might have shown in one of the earlier charts. So silver has more upside, and so you might choose to weight your percentage in favor of silver right now, as long as you've got a bit of patience and you can handle a little bit more volatility. So overall, yeah, in terms of cycles, we can see they both follow sort of reasonably similar patterns since the early 2000s. We've got, you know, gold went up during this first period, then fell during 2011 to 2014, and since then it's been moving steadily higher. And you can see it's just sort of broken out, and we think it's probably likely that gold might be at the start of this next up leg, maybe similar to what we had back in the sort of 2008 financial crisis times. So it might be at record highs in New Zealand dollars or close to in US, but yeah, it's likely in our view that it's just the start of a higher move. And there's just the same in silver. You can see they broadly follow the same kind of patterns. You can see silver has much sharper moves up. It also has some sharper moves down. And also you can see it probably follows gold. It takes a little while to get going. So silver's just started to get going here in this year, really. It had been pretty flat for the years before that. So possibly that this is just the start of a next, you know, fairly significant move for silver. So yeah, if you're looking to, if you're then keen, you know, there's a number of ways to invest in gold and silver. You've got physical gold and silver, like we sell, the actual bars and metal. And then you've got various other things like we've listed down here, unallocated pooled accounts, exchange traded funds. You've got mining shares, gold and silver options, and gold and silver futures and options. So the thing there with all those last about 5 things is that they all reintroduce that counterparty risk that we talked about earlier. That's the key thing to actually own gold. So that's something to be aware of, and to ask the question, is what you're buying actually backed by actual metal? So have you removed some of your wealth from the system, or have you just got, exposure to the price of gold? So, and that's what we think is key currently, is that, our reckoning is that we're in the current financial system is slowly dying and maybe starting to speed up that death and failing. So yeah, physical gold's, safely stored physical gold is a hedge against this. And as we've said, hopefully already, there's a hedge with some upside. So then we've got into the other options in terms of, you've got, if you're going to look at physical gold and silver, you've got collectible coins versus, just standard bullion bars or coins. Some of the things to be aware of there is that there's the high premiums versus low. So collectible coins will have higher, you'll pay more above the spot price for them, basically. That's the higher premiums. You also need a higher level of knowledge and expertise in order to actually know what you're buying. Otherwise, you might be paying more for it. Whereas bullion bars and coins, they just have a pretty, there's not much variation between people selling them. So that's your sort of safer bet. So, you're looking at rarity and collectability versus bullion, where you're just looking at the metal value. So that's why we just stick with the bullion bars and coins, because you're not really needing to have any other specific knowledge. So a few other final points to consider. I'm looking at the time, we're pretty close to done here. How to be sure of a purity, a few things to consider there are the likes of the purity stamps, hallmarks like we see here, Swiss, etc. You'll likely pay more for some of these serial numbers here. That's, some people like that. It's not like it's a necessity, but you will pay more from that. Things to consider are probably to buy from a long-standing, reputable dealer, and because they'll get their metal directly from a mint or a refiner, and that will ensure the chain of integrity. Here in New Zealand, something else to consider, there's no GST on gold or silver as long as it's a purity of 99.5% for gold or 99.9% for silver, I think it is. Pretty similar numbers, I think, in the US, in Australia, whereas in UK they actually have VAT on silver, and I think a lot of the Euro area does as well. There's other options there, buying offline or buying off a refiner or dealer or online options. To be honest, you probably could actually get a potentially cheaper price via the likes of TradeMe or eBay or places like that. Just be aware there's some downsides to consider there in terms of how can you be sure of the purity of what you're actually getting. How do you know you'll get your goods? Are they insured during delivery? So just things like that to consider. There's pros and cons. Then something else maybe just to consider that people often wonder is, buying a locally refined brand versus an offshore brand. Things to consider, the local brand is usually a lower premium above the spot price. And when you sell back to the refiner, you don't usually get any more for a more expensive offshore brand. Although if you might want to sell it overseas, then that's probably something just to bear in mind, because you might find it easier to sell a more globally recognized brand. And a brand like that, say like a Swiss Bank Gold Bar, and an ounce of that, that's quite a useful travel insurance policy too, because you've got basically $4,000 that you can hide in your wallet or your bag or something, and there's a bit of backup money that you can cash in anywhere. Final tip there is just actually to watch your local currency gold and silver price. The price they quote on the news is usually the US dollar price. You want to follow whatever currency it is that you're going to buy it in, whether that's New Zealand dollar, Australian pound, etc. And these two charts here just happen to show the one on the left, the New Zealand dollar gold price, and the one on the right is the US, and they're for the same period, but it sort of shows you how the price can vary driven by what the New Zealand dollar exchange rate is doing. So yeah, just follow the local one. And then finally, storage is obviously something to consider if you're doing if you're buying physical metals. Where to store them? There's various options. You've got home safes, you've got private vaults and safety deposit boxes. You don't really want bank vaults. There's also the midnight gardening of digging a hole and burying it in the backyard or on the back of the farm. That does happen as well. So we can give you thoughts on various storage options in New Zealand. We've also got them around the world, Singapore, Switzerland, Panama, Cayman Islands, USA, places like that. Singapore is kind of useful in that you can actually borrow against it as collateral if the need arose to save you selling it as well. So yeah, various options there. On the who to tell, that's probably like, don't shout it from the rooftops, but make sure someone knows where it actually is as well, because there are occasions of someone shuffling off this the planet Earth and not having told anyone, and which is why you hear about them digging up, a bunch of coins from hundreds and hundreds, if not thousands of years ago, because someone buried it and no one knew it was there. So yeah, tell someone so your heirs can get it at least. Which I think that does bring us to the end. It was slightly longer than I intended, but yeah, you can head over to the website. We've got a free e-course there on gold and silver. You can scan that, or you can book a call. We offer a free bullion consultation for Tony's clients as well, so you can book a slot in there, and we're happy to answer questions and general things as well. So yeah, hopefully that has been of some help. And I don't know, I haven't really been watching the chat at all myself, but I guess we may have some questions that have come in. Let's have a jump over into there. I'll just get back into Zoom properly.
Not a
question.
lot yet. I think people, people can ask their question now if they want.
Yeah, for sure. How do you want to do that, Tony? Just by someone typing it in, or does someone just unmute and just ask the question verbally, or what do you want to do there?
Yep. Up to the people. I mean, sometimes people can unmute, or you can send it in the chat. It's whatever they like. Yeah, I know that's great. Thanks, Glenn. I mean, I know there's a bit of bamboozling there with different figures and all this stuff, but I think the bottom line is that silver and gold, these have been money for a long time. Silver has an industrial use as well, and in times of unrest like what we're entering into, that is really when you need your insurance. I would say that this is definitely a time of diversifying through different things.
Yep. Yeah, that's right. It's if you've got your kind of investment pyramid, well then that's kind of our thinking, is that gold and silver is a good thing to make up that sort of lower run on it, that it's pretty stable. It's there, as we've shown, there is potentially some upside, but it's more that it won't disappear is probably the key thing, as you alluded to. I can see
Can
a
you hear
couple
me,
of questions there that have come in terms of tax obligation. Yeah, well, I'm not an accountant, but and it depends on where you are. But in New Zealand here, the IRD did come out with a sort of like I don't know what they would call it. It's like a guideline. It's not a law. They basically the onus is on you to prove why you didn't buy gold and silver intending to sell it, because in their view, the only reason you buy it is to sell it, which is pretty nonsensical, because many people buy it for a lot of other reasons, to hold on to it for decades and just to pass on to their heirs and so forth. But yeah, that's the bottom line, is that they require you to prove why you didn't buy it in order to sell it, because if you bought it in order to sell it, then you're buying it with a view to making a profit, and you have to pay tax on it. So that's my understanding in a very short.
Yeah, it's seen as basically property, and you just have to pay tax on the on the profit.
It's not dissimilar to crypto, probably in that region.
It's much the same.
Yeah.
It's much the same. Yeah.
Which again doesn't really make sense, but that's
no, it doesn't.
What they're doing. So it's probably, yeah, I guess there might be some ways of it's with both of those assets where it might be hard to prove that you've actually got it, but yeah, that would be a risk to who knows whether it would be worth running. I can see here there's another one about, do you think gold can be confiscated, or anything can be confiscated if the government's bad enough and makes bad enough rules? But I mean, I wouldn't say gold hasn't been confiscated, but there has been forced sales of it, like what happened in the US in the Depression sort of era, when they revalued the US dollar back then by basically telling everybody they had to sell it back to them, and then change the price of the link between the US dollar and gold after that. Here in New Zealand, we haven't really had that happen. There's not actually a history of it. I mean, anything's possible. My thinking would be that they probably don't really need to, because the reason they did it back then is because they needed to do that in order to actually devalue the dollar. Now they just devalue all our currencies just by printing and digitally creating more and more of them. So they don't really, there's actually no real reason for them to confiscate it. There's probably good reasons for them to, which goes on widely, in financial circles, there's good reasons for them to discourage people from doing it, because they don't really want that. It's sort of it's the canary in the coal mine that signals that things aren't all well. The gold price is going up, because really it's just the currency's going down. So I don't think there's this, I mean, anything's possible, but I think there's probably other things they'd do first if they needed to get more, currency to cover, government debts and other things. They could go and target people elsewhere. They could probably bring in a new tax on property or something that, especially here in New Zealand, that's widely owned. I mean, hardly anyone owns any gold currently. Even, globally, it's down, it's still like 1% or something. So we're a long way from getting back to the levels of it was at the end of the 80s, where maybe that was up to more like, I can't remember if it was maybe 8 or 10% or something like that from memory. So yeah, it's not impossible. Storage options in Australia.
Probably.
And also on the storage, Judy's asked, what's the view on the best storage and how safe are the vaults? And that's she's in New Zealand.
I missed that one. The best storage is it's the best storage is probably varies from person to person and what they think, I suppose. I mean, I guess everything you do comes with a level of risk, so it's how you try and mitigate that risk down to the very best degree. And for some people that might be spreading their eggs, so they might do a bit of it. They might go for vaults. They might have a safe. They might hide it. They might do a mixture of all those things. I mean, the vaults here in New Zealand have been very safe historically. There's never actually been a theft or anything like that from a vault in New Zealand. So yeah, there has been thefts from some in the likes of the UK and the US, but there is also, you can also have insurance on what's stored in the vault as well. So there are options there. So yeah, in terms of the best, well, it's probably hard to say, because it comes down to what the person is. Like if someone's just buying a couple of ounces, well, then there's probably no justification in spending the money that it takes to have a vault, when you can probably just go and hide that in your house pretty well and no one's ever going to find it. If you wanted to store a whole lot of silver, well, of course, that gets a bit tougher. So then you need some kind of storage that can actually handle that. So then you do need some type of specialist vaulting as well. So I've given a bit of a sitting on the fence answer, because it's probably there's not like a definite answer. But if you're buying a reasonable amount, then I think it's a good idea to sort of spread your eggs and not put it all in the same place. That's probably the short answer. What else have we got in here? I'm just looking.
So do you have a recommendation for storage in Australia?
Oh, right, that's what we just started on before. Yeah, any thoughts there, David?
ABC possibly, or Perth Mint.
Yeah,
would be your best, probably two big options to start with.
Yeah, ABC are on the eastern seaboard there, and we've had dealings with them. They've been around a long time, so yeah, they're an option there.
Glenn, can I just say that when I was talking to my insurance company,
Yeah,
you've got to have a specific, insurance companies have a specific dimensions and quality of home safe
exactly. Yeah.
before they will insure it. So you can't just have any safe. You've got to follow their dimensions and what their requirements are.
Yeah, that's a very good point, Judy. And the other thing about safes to be aware of is like that, what they call a cash rating. So you need to know, you've got to plan forward a little bit and think about, one, how much you might want to buy, but then also two, what the potential value of that will be. Because if the price goes up, they sort of have the cash rating sort of to do with how not how impregnable, but because every safe can be beaten, but yeah, to do with how safe the safe is, I suppose. So that's something else to be aware of. You actually need to plan ahead a little bit and try and think what your value of your bullion might be in a few years' time. So, but if you're looking at the safe, well, then those are the kind of questions you'd be able to ask the safe retailer that you're buying from as well. That's certainly something to think about. Yeah, thanks, Judy. That's a very good point. And I see there's a question here from Nick. So the best metals are in block form as opposed to fancy coins. Yeah, well, I mean, I guess depends on your definition of best. I mean, fancy coins can have a very good return, like collectible coins, but you need to know the right one. If you're talking about just a sort of a relatively normal what's called a bullion coin, or just like a more mass-produced coin, then you'll still pay a little bit more from them compared to just a bar. And you'll also, like when you sell the to them, you're likely to get the same amount of value back. So the best value is certainly just your bars of silver and gold, but still plenty of people like some coins as well, because they do look pretty nice. But yeah, there's certainly better value in bars, and certainly better value in bars than collectible coins, where you might pay, like if the gold price is say $4,000, and you then for a gold coin you might be paying a little bit above that. For some collectible coins you could be paying like double the price. It might be $8,000, and then you're kind of hoping that that's going to go up more in value due to the sort of collectibleness or the rarity of it, which can happen. But of course you need to know your coins, and probably in New Zealand there's not a massive market for that either. Like there's probably more of a collectible market like in the likes of the US and Europe, just because there's more history there as well. Not to say there isn't, there are still collectors here also. Oh, that's nice. We've got someone saying that they bought silver and gold from us a while ago and highly recommend it, so we appreciate that. Well, again, it's good to hear you'll be back again in the future. Any recommendation where to liquidate apart from where you buy from? Yeah, well, where you buy from is, like the actual dealers and refiners are probably the best places to get it, to sell it, or the easiest. You can certainly see there's people on the likes of Trade Me that are selling them as well. That's where you're likely to get a better price, because you might actually sell to someone that doesn't really understand the value of it. You might be able to sell for a little bit over the spot price. Yeah, when the time comes to sell, I mean, who knows? And if things change and people become more aware of it, which is what I think it will happen, potentially you'll be able to actually maybe not even sell it. You might be able to spend it. So you might be able to swap it for something else. You might be able to swap it for some other asset that's actually worth less than what it is now, like a house or something. In fact, I know a client of ours bought a bunch of silver and then they ended up trading that for a motorbike, actually, I think. So they kind of did a straight out swap with someone. And so then it's, hopefully there's no one from the IRD listening, but effectively it's off the book then as well. No one knows that you got rid of it, and the other guy, no one knows that he got it either. So that's what some other people also do as well.
Can I just ask you about the IRD, Glenn? Because when I bought some overseas, and when I told my accountant, she went, "Oh my God, you've got to pay tax on that." And then I learned that coins you don't have to pay tax on here.
I would be surprised, actually. I don't know that bars and coins are seen in a particularly different light. And I don't think really even kind of collectibles wouldn't be seen in a particularly different light either, because you'd have to argue that why you bought a collectible, it's probably for the price for that to go up in the future. So I'm not aware of them being, I'm not an accountant either, so I'm not telling you your accountant's wrong, but I'm not aware of there being a difference in terms of gold and silver. I mean, of course, I'm aware that when you own assets overseas, like shares or whatever, then I think the way the tax works here, you still have to, pay tax here based upon how an asset overseas has gone up or down in value. But I'm not an accountant, so I wouldn't, don't totally quote me on that, but I'm not aware of there being a difference between bars and coins.
We can look into that, Judy. We'll look into that, Judy, but I think Glenn's right though.
Sorry, David, what did you say?
We'll look into that. What your question was, whether you pay tax on coins, but I'm pretty sure gold's gold.
I think there's something different about coins.
Okay,
I do. Yeah.
It would be good if there was, because but yeah, I'm sort of just thinking through, having read their decision, or their guideline, which I don't think is a very good guideline at all. Like someone will probably take it to court, and there's a reasonable chance you'd win. But having read what they've said, I can't quite see how they would, how coins would make a difference in how they kind of rule on that, because I guess it would be in around why you bought them. And so maybe with coins, you could make an argument about the reasons why you bought them and that you don't intend to sell them. That might be where the difference could be basically. That would still require someone to kind of prove their argument, I suppose.
Yeah.
And so just looking at what else we've got there. Someone's talking about. Yeah, I guess that's saying Josephine saying about 2/3 of the budget was used to purchase silver a while back, and 5-ounce bullion bars. I've been told they come in smaller amount. Yeah, well, that's right. The smaller sort of silver, like 1-ounce coins or even 5-ounce, like a 5-ounce silver bar is about what? I don't know. Actually, David had a better idea. It's probably $250 or $70 or something like that off the top of my head. I can't remember. But
I'll tell you in a second, but it's around. I'll tell you in a second once I open it up.
Once he finds that out, but effectively, just jump in when you've found it, David. But effectively, they are useful potentially in the future as everyday trade items, I suppose. To cover groceries and necessities of life type stuff. That's why definitely we didn't used to see that many people buy silver coins. Probably 10 years ago, it wasn't that common, but certainly. I think the whole kind of COVID scenario made people kind of sit up and take notice a bit more and think about the potential for things to go wrong. And maybe even more recently, when we had that, what was it called? The CrowdStrike issue with the bank outages and things and credit cards not working and all that sort of thing. I mean, that's a good reason to actually just to hold some physical cash. Like definitely, I mean, while cash loses value, there's good reason to still hold some because you can still use it to buy groceries. But also potentially you could use those silver coins. And as I alluded to earlier, if people get more an awareness of what the worth and the value of gold and silver are, then you'll actually find that it'll become easier to trade because someone will actually understand, what that value is. At the moment, if you went up in the street and, I've seen videos of them doing it in the US where it's sort of like, do you want this silver coin or this 5-ounce silver bar, or do you want these 5 bars of Hershey's chocolate? A lot of people will take the chocolate because they don't have any concept of what the silver's actually worth, even though it's like $15 versus $250. So I mean, it shows that there's not a great awareness. I think people might have more of an idea of what gold is worth, but they don't have any idea what silver is worth. So yeah, did you find the price there, David, or was I about right?
It's about 270 Kiwi dollars for a 5-ounce bar of silver.
Yeah, so that's certainly why some people do allocate a portion of their budget to having those smaller denominations. But your better value is actually to buy like the kilo silver bars. They have definitely got the lower spot price, so that's the better way to buy in terms of getting the most sort of silver for your buck, basically. But then you might, chunk off a piece of that, whether it might be, 10 or 20% or something, I don't know, of your silver purchase, you might put into some coins. So you've got a bit of tradability as a further, like that's even more hardcore insurance policy, I suppose, is the way you'd look at that. That's your worst case scenario, sort of Mad Max type, well, not even that, but just that's just your full destruction of the monetary system kind of insurance policy. And we have seen that in other countries. We've seen that in, obviously, historically in Germany in the post First World War, and we've seen it in Argentina more recently, and in Zimbabwe and places like that. But probably the thing now is that most of those when they happened in those countries, they just jumped onto another currency, so they just used the US dollar or something like that. In Zimbabwe, they did actually use, there's reports of them using like small little pieces of gold and stuff as well. But yeah, the difference is currently that if it happens on a larger scale, there's no actual other currency to jump into, because they're probably, even though we've talked about like the US dollar and debt and having all this debt and so forth, and there's troubles for that. I mean, they're all every other currency is connected to the US dollar, so where it goes, they kind of all follow. They just take it in turns and going up and down. And it's like the old saying of like the prettiest horse in the glue factory. Like they all get the bullet in the end. So that's kind of the way the different currencies go. They just sort of take it in terms of losing value, and probably the US dollar's been quite strong, and most of the other currencies like the New Zealand dollar's been weak. It's probably now that we're just switching into a phase where the US dollar is going to be weaker and a lot of the other currencies are going to be stronger, including the New Zealand dollar. Doesn't mean that the New Zealand dollar gold price is probably still going to go up. It just might not go up as much in a percentage term as in the US dollar at that moment, but then it's gone up more in recent times in the US. As I say, they're all just taking it in turns. And if you're only looking at the dollar values, you don't really get it. But if you all compare them back to something tangible, you see that they're losing value. Anyway, I've kind of got a bit sidetracked, I think. I don't even know what the question was that I answered there. But I'm just saying, what have we got? Oh, there's a few others coming in. Best way to store. Said it may tarnish. Does it matter? Yeah, well, it probably doesn't really matter because you can just clean it. It's still silver. You'll still be able to sell it. Likely you'll still be able to sell it and it won't necessarily change the value that much either. Yeah, it's more just about keeping any moisture off it. So yeah, and if it's stored inside a house, yeah, that's pretty good. If buried in the garden, best way to wrap it. Yeah, there's some actually we've got on probably rather than trying to explain that, we've actually got an article on our website that actually says about storing silver and the things to look at, because there are a few things there. So maybe if you just have a look at that, Karen, and otherwise I'll rattle on for another 5 or 10 minutes explaining all that. And as Tony says, yeah, silver eraser, that eraser cleaner, that works pretty well. Wrap it in bubble wrap. Yep, good points, good points, Tony. Yeah, at least in a fire it won't burn like cash. That is a very good point. It'll still be there. What else have we got? Are there storage vaults insured? Yes, you can get, or maybe not all of them, but you can get insurance on some of them. So yeah, we can let us know there, Tony. We can help you out with the best ones to go for there.
I think
any other questions there? We're getting a few people saying thanks and that they've bought numerous times from us. So that's good to hear. Good to hear from you folks.
I've got a question. What's your crystal ball say around the American elections, and what are you prognosticating about what's coming in the next few months?
Crystal ball, yeah. I don't know. Yeah, the election is interesting, and it depends what polls you read as to who's meant to be ahead or behind or what have you.
I think it's going to get pretty volatile.
Yeah, I think it'll probably get volatile as well. I mean, maybe the easiest answer is that it might not matter that much in the long run, because it's not like, even if someone comes in with a really great plan, like it's quite a big hole that's been dug. So I don't know how you dig yourself out of it in a real hurry. I mean, there's definitely some things that could be done that would make things better. It's hard to see how they will actually do that, even if either side gets in. If the status quo gets in, you can kind of see what will change. I mean, and Trump as well. They're both sides are kind of arguing in different ways for a weaker US dollar as well. I mean, they kind of have to do that. They need to weaken the dollar to inflate away the massive debt load that they've got. There's not really any other way. And Trump being like a big property guy, well, that kind of works for property too, devaluation as well. So, I mean, yeah, I don't know, I've read plenty of things. It's kind of probably your guess is as good as mine as to who actually gets in. It seemed like Trump was looking pretty likely. They're certainly doing all they can to disparage him at the moment. So, yeah, I mean, who knows exactly? That's probably my overriding view, is that it probably doesn't really matter, because I think the outcome in the long run is kind of the same. And I think at the end of the day, the US is like 50 separate countries as well. So, I think there's a pretty high likelihood of some kind of civil war or something in the US, or some states, seceding and exiting, because they see things very differently. If you take Texas to California, and then, down south into Miami way and down there, they've got quite different views on things as well. So that seems there's a pretty high potential of some kind of, civil war or something. I've seen some good arguments where they make, and they make out, because there's so much disparity in views between the US, even within states and cities, that, you know, you could see things get pretty gnarly in some of the cities, because even within those cities, there's obviously vast differences of opinion of how things should be. So,
So how does that affect gold if they decide to have a civil war?
well, I mean, I guess it depends what that looks like. I think it affects gold in that there's certainly historical precedent for when significant wars happen. Like in the long run, you know, gold goes up, or rather, the better way to say that is gold goes, you know, the other currencies go down. So, I mean, you know, if you get to some situation like that, things have gotten pretty sketchy. There's a lot of breakdown generally in society. Those are kind of times where I think you definitely want something that's got some long-term, you know, long-term way of holding value. And I guess in those times, some people will then argue, well, and then if that happens, isn't your best thing to do to own like guns and food and et cetera, et cetera? Well, yeah, then probably guns are probably pretty good. There's a limit to how much food. If you've got quite a bit of wealth, there's a limit to how much canned food you can buy and store in the cupboard. And then usually when strife happens, it only lasts for a while, and something, you know, like humans have a way of getting to the other side of it. So it's sort of like, what do you have when you get to the other side? Well, I don't know the answers to all these, and there's plenty of people that have theories and they make out that they're well connected and they know the answers, but no one really does. They're all just guessing, and they probably sells subscriptions and books and other things to sell these things, but no one really knows. So that's the way I look at it, is that I don't really know what the future holds, but I kind of know that precious metals are going to have some value in the future. So it's more about just transporting your value to what the other side looks like with the changes in society that are probably coming. And gold and silver is one way and one part of doing that, is the way I kind of look at it. Yeah, so I know that was a bit of a pretty fuzzy crystal ball, but I don't really profess to be a soothsayer or a guru, really. So I'm a bit careful about saying things, because they often take much longer to happen. I mean, we've been following this for ages, and the end of the world was just around the corner, you know, back in the early 2000s. So there's always someone saying that it's going to happen next month, and, you know, like, I'm not saying it won't, and it can, and things can happen really fast, but things have a way of slowly happening, and then all of a sudden they happen really fast. So, you know, better a year or 5 or 10 years too early than a day too late if you're on the wrong side of that change happening, basically.
Yeah. Thank you.
Awesome, Glenn. Well, I think we might have we'll wrap it up there. I think
we're well over the 6 o'clock.
Yeah. But thanks everyone. If you've got any queries, you can contact them direct, or you can contact us as well. We've now set up a gold and silver page on our website too, so we're going to work with these guys ongoingly. So so thanks everyone. Appreciate your time. And
thank you, Tony.
Yeah, thanks David. Thanks Glenn. I really appreciate it. And
no problem. Thanks again for having us, Tony. It's always a pleasure to be on, and thanks for the good, insightful, not surprisingly insightful questions, because your you know, the people on your crew are obviously fairly well enlightened, Tony, as well. So not a surprise that there's good, knowledgeable questions coming in there. So yeah, thanks for having us again.
Yeah, awesome.
Okay, thanks guys.
Cheers.
Thank you.
Cheers, guys. See you.
Thank you.
Cheers. Thank you all.
Bye now.